All right, we are recording. I'll share my screen here. Guys, let me know if anyone has questions in. There we go. Let me know in the chat. Uh, Happy to answer any questions that I can. Super brief today, and I'm sure I'll find a way to drone on for the full time, but maybe we'll wrap up early. Mostly because I just don't think a lot has changed since last week. Last week we talked about mean reversion. So last Wednesday, talked about mean reversions being the base case, maybe a little bit more downside. Very confident in the 70 to 75K region for Bitcoin. Let's go to a cleaner chart. I want to save all this stuff here. Let's go to here are the can't see. There we go. Yeah. So we kind of talked about mean reversion being the base case, which the 21-week simple moving average. And I guess you could use like, do I have the SMAs on here? 200-day average. We're slightly above. We've kind of reclaimed. But 21-week simple moving average. If you're in a bull market for Bitcoin, Bitcoin spends very little time below this level. Or that was a 200. That was a 200 moving average on the 4-hour, I believe. Let me see if. Put this one back on. Oh, no, it was right. If you're in an actual bull market, Bitcoin spends very little time below the 21-week simple moving average. And then even when you're in a full-blown bear market, you get retests of this level, fairly regularly. So even if I believed we were in a full-blown bear market, I would be very much inclined to see a retest of the 21-week simple moving average, which is at like 93.3K. So to be kind of short, and I'm not like short-term super bullish here. Like I do think we can come back down to that 70 to 75K region, which is basically that first wave of our green easy bands right now, which just gives us more confidence in that level, more confidence in that region. We talked about all the reasons, 2 or 3 weeks ago, all the reasons why we believe 70 to 75K should hold if we do see a move downwards. So super confident in that level. So I think it's really as simple as like bidding this region if we get it, and otherwise you just have to come to the conclusion on whether or not you think we are in a bull market or not, whether or not you think the top is in for Bitcoin. I have talked at length about why I think that it's not in. Why I think we have more upside throughout the rest of 2025. So I'm bullish here. I'm long here. I know that if we do get this downside correction, I can trim up, I can hedge short, whatever I need to do to survive and minimize any downside into this region. And I'll just long this region with a lot of confidence. And look, if it goes through and I'm wrong with my TA, or wrong with my analysis, then that is what it is, and I'll lose money. But that's part of playing this game. So remain bullish with possible downside to 70, 75K. I'm happy to be a buyer down there. But even now, like, since for the last week, so this would have been last Wednesday, we were kind of around here, 82-ish. Even maybe the weekend. I don't know. I don't know how long it's, necessarily been my opinion, but mean reversion. And mean reversion is like 93K. And 93K seems like super high and expensive Bitcoin now, but we've spent over 100 days above 92K, with the bulk of that price action hovering around 100K. So one sec. So I don't think 93K is like all that that big of a bull target. Like I don't think you have to be like, I think you could be bearish. I think you could think that we're in a bear market and still expect a back test of 93K, or at least this kind of horizontal level that I've got drawn at like 91.7, which is kind of our range low. Yes, we did kind of retest it in the short term, but it looks like Bitcoin wants to test it again. Right. Oftentimes you can get that kind of short term retest, right? come back up for another retest. Here we got one. So that's pretty much it. I mean, that is, I mean, I hate, and I'm not like, trying cutting it short. Stay as, stay for the, we can, talk this entire time, and I will, talk more, but that is essentially what my strategy boils down to right now. Taking into account all the variables we've talked about, oil prices, CPI, tariffs, a lot of that potentially being priced in to markets already with this drawdown, and my willingness to buy a strong support level, and just the fact that I think the base case is that this ends up mean reverting, and a mean reversion is probably going to look pretty similar to a reclaim. And if we do reclaim, I think it's off to the races. This is a pretty common, it's kind of a meme at this point, but this is, referred to as accumulation, um, manipulation, and then expansion. And I think we're going to follow that pattern this time around. Um, could be wrong, but willing to bet quite a bit that we still have room left to go. Beyond that, with like tax selling being over, I know beating a dead horse on the tax selling thing, but tax selling's over. The bulk of it, or pretty much all of it, we're through the worst of it. I think we're going to start to see some upside from here. Again, short term downside 70 to 7. I say, like, I want to, kind of hedge everything I say here to the upside, with the fact that, like, I do think it's possible we go down for one last stab into this region. Maybe some bad news comes out. Maybe everyone panics. Maybe some early longs get flushed, or late longs, whatever you, um, what have you. But maybe we get a triple bull div on the daily, whatever. I just think that, over here we got that triple stab down here. In the past we've had some bottoms where you've kind of stabbed down into regions, multiple times before getting a solid upside reaction. Kind of last, in 2021, mid bull market, that deep correction, kind of similar, where you had multiple stabs and you had that kind of slow burning bullish divergence before we popped. So, I mean, we could just chop around down here and get multiple more stabs. And I think it's all about just survival until this thing, reclaims and ends up going higher. All right, that's Bitcoin. Let's see here. Total 3 Bitcoin. So this is like, are we going to get an alt season? We're sitting here under the 21-week simple moving average after having broken a massive downtrend. Huge liquidation wick. Normally large reversals come after large aggressive moves in one direction or the other. And we've seen this start to reverse course from here. Now, if we get that, 70 to 75K Bitcoin, maybe we do get one more flush in alts, right? And then we get a cleaner wedge and then a breakout. But I do think this thing's threatening to break out here. And if it breaks above this kind of horizontal level, 21-week simple moving average level, which would likely be in line with Bitcoin, starting to run above 100K, I think you'd see a lot of alt start to run. So pretty in the short term, pretty neutral on alts versus Bitcoin. I think they could come back down here, but again, I've been a big proponent of, alt season basically already being underway. Like, as in, this being the bottom on altcoin dominance and it just being up from here, even if it means a higher low. But since, we've had this big liquidation, this is, we've just been grinding up in altcoin dominance, excluding ETH. Gold and silver, super bullish. Silver almost at local highs, almost at yearly highs. Gold at all-time highs today. I don't need to be a broken record on gold and silver. I mean, I think, back here, I'm like, if you don't have a position yet on gold, get one. If you don't have a position yet on gold, get one. I've been saying this for a couple of years now. And yeah, I just think not having a gold position is just, up until this point, is just a horrendous mistake. There's really been no reason not to be long gold, in my opinion. DXY certainly starting to soften up a little bit. Let's turn off these easy bands. If we want a blow off in equities and a blow off in risk, blow off in Bitcoin and crypto, we want to see DXY move downwards aggressively. I'll just overlay the Bitcoin chart real quick over DXY. Historically speaking, when DXY capitulates, you start to see a large move out of Bitcoin, right? Kind of highlighted these regions already. Blow off top in Bitcoin, blow off top in Bitcoin, down DXY. And these are like massive, massive capitulations in DXY. Now, this capitulation up here in DXY kind of kicked off the bull run, ended the bear market, kicked off the bull run. I think we're about to see another capitulation, like deep capitulation on DXY, which may very well line up with an aggressive move out of Bitcoin. Short term, we've just kind of like revalidated this from a prior wedge that we were in, or whatever you want to call it. And now, if I zoom in a little bit here to the 4 hour, let's go to the daily. I just think this is gonna continue to print head and shoulders, like nested head and shoulders. If this jams back up, then maybe we've got problems. But for me right now, DXY is looking rather weak, right? And I want to see this capitulate below these multi-year levels. I want this to go back to like prior to 2022 lows. That would be very bullish for risk assets. On the blueprint, the Bitcoin blueprint, I did make a little bit of an update. Go to that, and then we'll see if we have any questions. Oh, we got a lot of questions today, right? 320. No, that was all from last week. A potential warning on a volcano eruption in Japan, I genuinely don't know. I mean, obviously, if it's like a massive natural disaster that claims a lot of lives, that'd be terrible. I really hope that doesn't happen. I don't know anything about Mount Fuji or the potential problems that would cause. I mean, obviously, if it just takes out an entire city and you have like a mass, casualty event, then sure, probably not going to be good for markets. But let's just hope that doesn't happen. All right, so this is probably like my favorite chart at the moment. I think this has been very actually, before we do this, let's just go into the short-term Bitcoin chart. Let's check the bid. So we had a nice bid all day long, and then just like randomly right before this meeting, it kind of flipped negative into an ask. Like we had this nice bid kind of building up into this kind of nice bull flag. And all of a sudden we get up here and it's just kind of flipped negative, which isn't massively bad. It just means, whoever had this bid might have pulled it, or there might have been some ask added up above us. Not sure exactly what that means, but so far, I mean, we're still in this bull flag, which I'll cover real quick. Yeah, I mean, short term, I'm a little bit more neutral short term, but I do lean a little bit bullish because I'm high time frame bullish, and that kind of seeps into the short term. Right now, all I see is this. Let's go to the 4 hour. Right, we had this wedge, and when we were pressing up into this wedge last week, whenever it was, we were kind of like, oh, well, maybe we'll see some downside and that'll get front run and we'll get the nice triple bottom. Or potentially we get our 70 to 75K region filled, and that creates, a bigger wedge, a third tap on the wedge, daily bullish divergence. Well, since then, we've really just popped out of the top of this wedge and we started bull flagging on the hourly / 4 hour. Right. So all I see right here, if I'm trying to remain as objective as possible, like I know everyone's kind of like really worried about, I don't know if worried is the right idea or the right word for me. I'm not necessarily worried about this happening, because if it does, I just think you set bids down here. I mean, this could get front run, of course, but if you've already been buying, right, if you've already filled here and filled here in this 70 to 80K buy region, really the only bids that I want filled from this point forward is 70 to 75K. So either this happens and we get front run on our final bids, or, we get all the way filled. And ideally this holds, and then we just have to reassess and decide if we want to take profits early, and be less bullish, or if we want to see what we want to ride up higher. It's entirely possible that we could get a bounce and then make a lower high and then roll over, but that's really not my base case. My base case is that Bitcoin sets new highs this year, new all-time highs. So right now, as we look at this, we see a nice little wedge breakout into a low time frame bull flag. And this low time frame bull flag has gotten decently strong reactions in the last 2 trips down to this kind of the bottom of this support region, which I kind of have labeled as a chop zone, but this is a strong level. This is it's like a margin pressure level or something. I forget what exactly it is. I don't want to necessarily say it's a strong level, but it is a support level. So if I'm seeing a wedge breakout and a bull flag, my base case is going to be continuation again into that 92 to 93K. We kind of got this red box here was kind of our range, our prior range lows. So you got to think there's going to be a lot of sellers there. You also have this high that was made on that news pump. You have to think there's a lot of shorts hiding up here and a lot of liquidity up here to go get, snagged, run the high. Now you set a higher high and you can start seeing a more bullish chart develop. 94 to 95K has a heavy bid, heavy ask. A lot of Bitcoin for sale at 95K. There's a sell wall in the order books there. So somewhere in this region would be kind of the base case of continuation on upwards, then a pullback, and then ideally at some point, whether it's a shallow higher low, a shallow retracement, or a deeper retracement, I would expect some form of a pullback, and then ideally set the higher low and then continue upwards. So I've kind of drawn what I think could be, the more extreme of the base case. So, all the way up to tap that, 95K region and then all the way back down to 86, maybe even 82. And then, set a higher low. So that's the base case, low time frame. Obviously these patterns don't always have to pan out, but they give you at least a little bit of an edge. We have the descending wedge into the short-term bull flag, low time frame. We have been in a nice little uptrend. You'd expect a little higher low here and to a higher high. Maybe we don't run up to 95. Maybe we just run up to that 21-week simple moving average at 92.3 or 93.3, wherever it was. So kind of open-minded here, but I would, to be honest, expect a little bit of upside here, even though lower time frame stuff is a little bit more difficult to project. If this thing rolls over here, which is entirely possible that this thing rolls over here, right? Now all of a sudden we're in a situation where this might chop down to our 82 to 83 is a big level. Maybe we get filled here. Maybe we get filled here. I'm not bidding that region more than likely. I'd probably save to build there. Then all of a sudden this just becomes a much longer drawn out pattern. What I would rather see is, on this kind of time frame here in April, moving up and setting a higher low. So if we roll over from here, I think you get kind of just a shorter term bearish reaction. You've set another lower high, and you now need to come back down and set a higher low than the 77K low that we set. All right, so let me go over to the Bitcoin blueprint chart. That is one of the main things that's been keeping me bullish. One of the main things that led to me taking a lot of profits in January. The fact that we had all that tax selling. All of this tax selling here. If this fractal, this is an inverted fractal for Bitcoin from 1 year prior. So if this fractal is going downwards, that is bearish, right? Right now, we've bottomed out. This was equivalent to the $73,000 Bitcoin high last year, right? And then what did? We chopped around. So from here, I put this little red moon here, or red, not a moon, it's red circle, just because this is where some of the, like, you could technically get a little bit of tax selling here, but the bulk of it's done on the initial run up. All of these buys have very likely been flushed out by now because we chopped so much in this region. So I'm not terribly worried about tax selling all of this chop. All I know is, or all I really care about is the fact that the bulk of the move topped out, or in this case, bottomed out. So the tax selling from here forward, this is starting to trend upwards. It's choppy, but this is the aggressive tax selling is over, right? The aggressive tax selling is over. So this little red circle here is just to be mindful of, hey, like short term until maybe the end of March, which is kind of where we're at right now. Maybe we see a little boost down to, mid-April. We have maybe a little bit of tax selling, but not too worried about it. Beyond that, we've got the seasonality fractal here, which I drew out, I traced into a squiggle. We bottomed out for Bitcoin. So far, we've bottomed out in line with the seasonality fractal. Bitcoin, ever since the ETFs launched, Bitcoin has been a very seasonal asset. So I, put a fair amount of weight into this, and this would project upside from here. Do I think we're going to follow this exactly? No, but I see this fractal, creeping up for the rest of the year. It's one more data point, one more variable to lead me to be just a little bit more bullish and a little less bearish. March historically pretty neutral. April historically pretty good. So obviously March is kind of where we bottomed out. Back half of February, initial side of March is generally bad, but now we're on the back half of March where things are just historically a little bit better. April is generally a pretty decent month for equities. Seasonality, the seasonality fractal, to be clear, is trailing 20-year S&P 500 seasonality. We're in a period of low tax selling, and I've added this this region here. High probability of final leg starting March 7th through June 8th, potential summer pump, and then high probability of cycle top or distribution August 4th through November 5th. If you kind of recall, our tax selling, and again, our tax selling fractal called the top, right? Down to the day, which also overlapped with our inauguration. If we can make that assumption that the cycle top will be around August 4th to November 5th, we can kind of back into when our quote unquote final leg might start. So one thing is, like, historically, if we go and look at like prior halving cycles, historically we would see a top somewhere around September, October. Maybe we front run it this time. This would be in April. But these prior two tops would have us topping somewhere out in October, November. So essentially between, technically, I guess the end of April and, the end of October, maybe early November, we need to be on like kind of top alert in Bitcoin. Now, I know that some people think the 4-year market cycle is dead. I don't necessarily believe that. I think 4-year market cycle is still potentially, I think it's just diminishing, right? I just think you're going to get a little bit dampened volatility from all the, the ETFs. But historically, I think 4-year halving cycle for Bitcoin is still going to create some, some cyclical effects every 4 years. So we need to be on alert in basically September, October for a top. Well, that really lines up with our tax selling fractal, which would say, where was the bottom? A year prior, August 4th. That was our Japanese yen carry trade bottom. So we saw that was essentially from here, that was the lowest point. So everything, all the buys from here, if you held on to them, are in profit. Now, this next higher low did flush a lot of these buys out. So that could extend the cycle a little bit. And maybe maybe we don't see a top until September. Or maybe a lot of these buys didn't get flushed out, and You know, we don't see aggressive tax selling until November. But November 5th, remember we had the election, and a lot of these buys, if they're still in profit come this November, I think you're going to see all of these become tax sellers. Just like we just experienced, all these people become tax sellers. Remember, kind of projected local top based off of this being around January 20th. All of this turned into tax selling. We had very similar behavior, essentially from, if we're going to be, you know, if I had to nail down the move, like the pivot point, it would be this high or low. So it'd be more in line with like September 7th or so. But our range for when we'd expect a top would be somewhere between the bottom, August 4th, and the point of acceleration, November 5th. All right, so bear with me on that for just a second, and let's take a trip to, I guess, another Bitcoin chart. Got to the daily. And you basically look at any prior cycle, the last leg, or the leg that contains the, you know, the vast majority of the upside, is about 150 days. Even going back to like 2013, 2014, the final explosive leg up to, you know, $1,000+ was 150 days. Right? Same thing here. 150, 152 days. I'm not going to get it exact, but call it 150 days to the top at, you know, 19.7K from where we kind of, you know, had that bottoming out point. Right? The vast majority of the move was captured in the last 150 days into a low off top. Here as well, right? You just kind of grab the last 150 days of the move. And last cycle was particularly weird, as we did have 2 cycle tops, but like essentially, if you sold here and just sat out the rest of the bull market, you were fine, right? Like, where did the most explosive move last cycle come from? It was like this 150-day period right here, right? If you're just talking Bitcoin, 150 days, this was the most upside, right? Before we essentially started peaking. I mean, and then we kind of had another 150-day run on the tail end from these lows to these highs. Anyways, the point I'm trying to make here is that generally, like the final one, like if we don't believe the top is in, and we think the top could be somewhere between August and November, then the prior, logically, we'd think the prior 150 days or so into the top would be the most aggressive upside. So maybe we, you know, if our targets are like, you know, 150 to 250K Bitcoin, whatever, not trying to put a price target necessarily on top of it, more just trying to zoom this. The whole purpose of this blueprint is to be somewhat directionally accurate, directionally correct, but also the x-axis, the timeline, right? So like you can kind of think like, you can kind of be right about Bitcoin. You can say like, oh, one day Bitcoin will get over 200K. Cool, but when? You know, how do you trade that? You know, how do you avoid some downside? When do you take profit? So the whole point of this is really to just kind of zero in as much as possible on the x-axis, right? So we kind of say, you know, prior to a top, the 150 days prior are the most, you know, where you see the most aggressive move. So let's go to our potential top number 1 is November 5th, where we would kind of see like, you know, surely we would expect some downside in November 5th. So it's by November 5th. That's like the absolute latest that I could kind of see this market running hot for. And maybe we get some positive price action in 2026. I'm not going to sit and say that, you know, Bitcoin can't run to all-time highs in 2026. What I will say about 2026 is it's the second year of a presidential cycle, which is historically the worst. If I'm not mistaken. I got to go back. I got to go check. It's been a while since I've looked at the presidential cycles, but yeah, 2022 for Biden was when we got our mini recession. So I think that adds up. So 2026, we'd expect downside. All right. So again, there's just like a lot of reasons to think that Bitcoin's going to peak sometime in August to November of this year. So if we say, all right, 150 days prior to a potential top in Bitcoin, that's where we expect the most aggressive move. All right, that puts us at June 8th, right? So we would kind of expect an aggressive move in Bitcoin. Like if we think it's going to peak November 5th, we would expect an aggressive move out of Bitcoin to get started by June, June 8th or so, right? But we also know like that November 5th is kind of the latest date that we really, think, at least me personally, based on tax selling, all this aggressive buying behavior, year prior breaking out. Like I think, if we go and look at, again, the after halving chart, November's kind of pushing it. Prior cycles, if we're still, this would be this would be actually the latest market cycle peak we've had if we peaked, early November, which is possible because they have gotten subsequently later and later. But again, last cycle was kind of a weird cycle where we had an early peak and a late peak. So yeah, November 5th would kind of make sense in line with that like kind of later peak. So hopefully this market runs until November 5th. That'd be great. But on the downside, maybe we don't get that aggressive move starting until June, if that's the case. We do think it could peak as early as August 5th or August 4th, because that's where that tax selling really kicks in. My kind of sweet spot is September 6th, right? Again, September is also historically a bad month, historically the worst performing month for traditional finance. So it would kind of make sense to kind of peak into early September and then get all that downside on the back half of September. So we kind of measure back from August 4th, 150 days, and say, all right, we think that, there should be an aggressive move. If we're going to peak like August 4th, an aggressive move should begin sometime in 150 days prior. Well, kind of lines up with, the August 4th rather peak, and 150-day prior move lines up pretty perfectly with where we actually bottomed out at. We kind of, at here. If we take 150, if we assume the bottom is in, which is, a bold assumption, but not that crazy. 150 days from the bottom that we currently have would be around August 8th, which kind of lines up with maybe that August 4th date, somewhere August, September. So anyways, that's another reason why I've kind of overlaid this green region here, where I say high probability of final leg starting March 7th to June 8th. Because historically, we see the 150 days prior to a market cycle peak have the most aggressive move. And it generally starts about 150 days prior. And this is just working backwards from where we think, based on tax selling incentives, the market cycle peak could reasonably occur. Also based on the prior halving cycles. We think it could, occur somewhere between August and November, right? Take back 150 days prior, and we would expect, some upside here. So yeah, I mean, I think if nothing else, maybe we're a little bit early and we have some more chopping to do. But come June, I think this is like I should probably make this a little bit even more green. Like this is kind of the let's see here, make this a little bit less opaque, right? This is the sweet spot. June, July into August. And that's kind of why I've got it, summer pump labeled out. That's the base case. Now, obviously, the more green things that you have stacked on top of each other, the better, right? We've got, no negative things here. In fact, we've got like, this is a great period of time where there's no tax selling and the fractal's moving upwards, right? So, this is like this zone here, really the month of June, is particularly attractive. And then maybe the back half of June, we start to see some distribution and some weakness or maybe some little corrections. But that's my current Bitcoin blueprint. We also like, so high probability of cycle top / distribution. The other thing with this is that is interesting is it does line up with the lull in seasonality, right? Where it just goes flat. So there's just so many things that are adding up to make me think that this is the seasonal timeline and the cyclical timeline that we'll see some upside for crypto in. So basically, it's apart from a little bit of minor choppiness into like May, and then maybe some slowness between May and maybe in late May we get a little bit of the you start seeing the sell in May go away, whatever. You see, the seasonal kind of flat line, little mini correction here in May. Probably a lot of people will be calling for cycle top, whatever. Apart from that little blip, I'm maybe a little blip there seasonally. I'm pretty bullish here into August, September, October, November, which is still pretty broad range. But I would love to see us just be in this by the time we get into August, be in this like 150K plus region. That'd be phenomenal. So we'll see. Hopefully that makes sense. There's just like a lot of data points there that I'm kind of running through but I think it's super important to spend time doing analysis on the time-based component. You can do all the you can anyone can say 200K Bitcoin, 300K Bitcoin, sure, but is it going to take the next 4 years to get there, or are we going to get there on a shorter term time frame? So, all right. AI XBT, I mean, it's interesting. It becomes more useful in a frothy market. I'll say that. There's going to be a lot more demand for and attention placed on AI XBT and the Twitter bot or the AI agent in a more frothy environment. People are just going to be using it more because it's going to highlight more opportunities. In a bearish market, downtrending market, like why does anyone want access to AI XBT if there's not really any opportunities? So I'm not particularly like crazy bullish on it, but I do think it's useful. It'll probably see some speculation if we see upside in the next 3 months. Same thing for game. Like I think Virtual's protocol is potentially going to see some upside if the rest of the market does. I bought some of the SAM token, not necessarily because I'm like crazy bullish on their project, but based on the idea that I think the next big wave of speculation is going to take place in robotics, and there's just no supply. There's virtually no token, robotics tokens. What I mean, like, I can name there's thousands. There's literally thousands of AI tokens. AI, I mean, even the big ones, Zerobro AI 16Z Virtuals protocol. One sec. All right. But yeah, I can name off the top of my head probably a dozen AI tokens, and I know there's thousands more. And I can go to virtuals.io and show you a list of hundreds of AI tokens. I can name one robotics token, and that's SAM. And I don't think most people even know it exists. And they have real robots. I just think there's a high barrier to entry because you have to like go and build robots to like have an actual like robotics token. Other than that, it's Tesla, and that's why I'm bullish on Tesla. I could care less about the tariffs. I could care less about the cars. I could care less about anything else about Tesla. I could care less about Elon. Could care less about the political landscape of the next few years. I only care about the fact that it's basically the only public market play to get exposure to robotics, and I think robotics is going to be a big narrative. I think as soon as you see one of those little Optimus humanoid robotics guys walking down the street, or the first headline where it's taking a job, or working at Subway, Chipotle, moving boxes in warehouses, whatever job that they plug that humanoid robot into. um, I think even if robots don't end up taking, like, I think it's entirely, I don't know, like, maybe they take 3 to 5% of the workforce, labor force. Maybe they displace 3 to 5% of workers. Maybe they don't displace anybody, and it's all nonsense. Just in hype, similar to how I don't really think AI is, the more I think about it, and the more I see out of AI, I don't think AI is replacing a ton of people. I really don't. I see people that are like 90% of jobs are going to be gone to AI. Really? I mean, like, what jobs so far have been like automation? A lot of like digital job, a lot of automated jobs, or a lot of jobs can and have been automated already. Like, if you're in data entry, like, why are there still data entry jobs available? Like, data entry can mostly be automated, but we still have data entry jobs. It's not, if you're in data entry, no knock on you. Like, no, it's just like, there's so many jobs pulling files and reports that can be fully automated with a little bit of code. Code's been around forever, and yet these jobs are still around. I really think AI augments a lot of people's work, and I think robotics will probably be the same. I could be wrong. Uh, Regardless, just the fact that there's that unknown, but robots are obviously being manufactured and pushed, it's going to be a narrative, and I want to cash in on that narrative. I just want to front run everybody that doesn't have, like, the average person. If you don't own Tesla stock, you don't have exposure to robotics. You don't. Like, what stock do you own that gives you exposure to robotics? If you own the S&P 500, okay, whatever Tesla exposure you've got in there, like, nobody has exposure to it. It's under owned. Like, and you're going to see, what we saw with AI was like, AI is going to displace 40% of the workforce, whatever numbers get thrown around. We're going to see the same, in my opinion. My prediction is that we're going to see the same predictions tossed around for robotics. Oh, robots are going to replace everybody. Well, what are all the fund managers going to do if they're worried about a recession being caused by robot? They're going to go and get exposure to robotics companies. What are the robotics companies? There's like 3 or 4 big ones, but the only open market one is Tesla. So that's why I'm bullish on Tesla. That's why I own Tesla. I think the chart looks great for now, but even if it goes lower, I think I'm just going to get bailed out by the inevitable robotics narrative. Could care less about the cars, could care less about the car sales, could care less about the tariffs, could care less about who's president now or in 4 years. So that's my take on Tesla and robotics, and that's why I bought SAM. I bought the SAM token because it's the only legitimate robotics token that I could find. I don't have any price predictions for it. I bought it. I like to get into the low cap stuff at like 5 to 10 million. Ideally sub 5 million market cap. I think I bought like 30 million, 35 million. I don't know. Market cap. So, like, I didn't size massively into it. I have no idea what kind of speculation, what kind of market cap it could go to, but I just want to capture. I just think whenever I'm predicting a massive wave of demand for investment into robotics and speculation in robotics, and I just see a basically no supply of investments. And maybe I'm just like, I've looked, I've tried to do some research, but I just don't see where the average everyday person can get any exposure to that narrative whatsoever. So there's just a massive supply demand imbalance. Not necessarily that I'm super convinced robots are going to take over the world and displace the workforce. I don't care about any of that. I care about how much speculative demand is there going to be. I think there's going to be a lot, versus what's the supply of and barrier to entry. Supply of investments, and it's the supply is very small. So that's the thesis there. Other than XRP, which alts do I still like? Basically any suit coin, HBAR, Algorand, XLM. I think they all will rally behind XRP, but I think XRP is probably the better risk reward play until Bitcoin starts moving. I keep going. Do I think alts can keep going for another month after the Bitcoin peak? Maybe, I don't know. They have in the past, but I mean, we also saw alts just totally front run the latest Bitcoin peak by a month, right? Basically, Bitcoin peaked in January 20th, 21st, whatever, around inauguration, and AI altcoins and meme coins just got destroyed. They peaked January 2nd mostly. Some peaked in December. So I wouldn't bet on alts peaking after Bitcoin. I think that's a great way to get destroyed. Um, I would, obviously, the goal here is to take some profits and leave a runner, leave 10. Like, if we tee this up perfectly, like if the chart I've got pulled up right now by, I don't want to say by some miracle, but let's just say it plays out like this, and we tee it up perfectly. Like, the best we can do is projections, and I think projections are going to be mostly inaccurate, but you just want them to be like close enough to give you an edge in the market. But let's just say somehow this is like, 80, 90+% accuracy. That would be great. The goal is just, not nail the top completely down to the day and dollar. The goal is to take profits along the way, leave a runner in case, this thing goes a little bit crazy, and then just make a ton of money. Like, if we're long from the beginning of the move and we take profits throughout the bulk of the most aggressive move, we're going to capture a lot of profits. I'm not trying to long the Pico bottom and sell the Pico top perfectly. Also, just by virtue of like a cycle top, or quote unquote like a Bitcoin top, whatever. Let's just say we do get a Bitcoin top sometime in this time frame, or maybe it's late. Maybe the market's a little bit stronger. It comes in December. We've had December Bitcoin tops before. Things are going to get super volatile. So it's going to be really tough to like flip short at the exact right moment or whatever. But if we can just kind of be generally accurate, then, within the right vicinity, both on the X and Y axis, then we just have a slight edge in the market. We take a lot of profits off the table. That's the goal. Thoughts on Peak? I've never owned or been a fan of Peak. I don't know anything about the robotics elements. I know that's like a layer one or something for DePIN, decentralized physical infrastructure. The only time I ever looked at Peak, I saw like it had a massive, it said like a low circulating supply and a lot of overhang, like low float, high fully diluted valuation, and that generally turns me off. Also, it's on Polkadot, which again, Polkadot could be just like kind of a come from behind runner. Who knows, but it's just not on my radar of watch list. I'm looking for, what are the strongest performers recently since the election. It's been XRP. XRP's kind of been underperforming for the last couple weeks, but really like the last week and a half, which obviously is a red flag if that doesn't change. But historically speaking, XRP, at least going into the election or post-election, it did lag. It had like this weird lull of underperformance before it absolutely ripped. And I do think that XRP is one of those things that it can rip super aggressively. It has an amazing chart, but I really think that XRP needs a really strong Bitcoin move to kickstart it. Like, I think north of 110K Bitcoin, I think XRP just starts running hard. But until we get, some, all-time highs on Bitcoin, I don't know if XRP is going to just kind of solo run to all-time highs. It could, but I just think you really need confidence in Bitcoin for money to flow into XRP. I don't know anything about Nilian or Andrina or Intuitive Surgical. Robot surgery has been happening for a while. Good one. Yeah, I don't know any way to long that. I imagine you still have to have a surgeon for robot surgeries. I'm not going in and getting a surgery from just a robot with no human on the other end, keeping an eye on things. Yeah, I mean, I agree. I think you're probably unlikely to see any alts really take off until Bitcoin moves here. which is, not anything super. It's not like a profound statement, but I think a lot of times, and I'm guilty of it too, people get, caught up in the weeds of like trying to long their altcoins, and really Bitcoin's just chopping around. And until you get that strong, confident move out of Bitcoin, alts are just kind of stuck in the mud, so to speak. That being said, by the time Bitcoin gets to that, and this is why I generally try really hard to catch moves early. I've been pretty decent at catching legs early and getting long, allocating early in a leg, and then I take profits a little too soon or whatever. I've been guilty of that in the past. But I like to be long. Like a lot of people are going to be like, I gotta wait for 90. I gotta wait for us to break 100K to long Bitcoin. I gotta wait for confirmation, or they'll wait for 110K Bitcoin, or they'll wait for 95K Bitcoin to flip bias long, which is all fine, especially if you're just like you're a trader, kind of trying to catch the meat of the move, like the middle of the move. I like to be long from as early as possible in the move, because with altcoins, like you can see alt, especially when they're decimated minus 90%. You can see 150% move off of the lows for some of these altcoins before Bitcoin really validates into bullish structure, which can be difficult to trade. But if you actually catch it early, it does pay multiples more, especially if you're using leverage, which I don't necessarily recommend. But if you're catching a much larger percentage of the move with leverage, that's where you can really get some massive gains. Yeah, nothing really else to say beyond that. I'd say the word I'd probably use to describe my bullishness is like stubbornly bullish, just because the more, like, if I try to look at it as objectively as possible, I don't see a bear case, and I see just so much lining up for bullishness into the rest of the year. And by being stubbornly bullish, if we do see some short-term downside, I'm just going to bid. I'm going to bid and invalidate below 70K. And if we spend time below 70K for more than a day, then maybe I was wrong and the cycle top is in, and we're going into a bear market. But I just don't see the case for that quite yet. Anything else before we wrap it up? Going once, going twice. As usual, I'm just one person. The market is the collective conscious and collective allocations of capital from every market participant. I feel like I've developed a slight edge, and I feel fairly confident in my analysis so far. And I feel like a little bit, honestly, a little more confident in the market than I've felt in a while. So, take that with a grain of salt or whatever, but do your own analysis. Take this, take my opinions and the variables and, data points that I present, into account in a wider variety of research. I just try to collect as much data, and you have to be careful, because like, obviously I'm guilty of being a little too bullish biased, because it's just in my nature to be a little bit more optimistic. And obviously I would want to make money. So I want I'm a better long trader than I'm a short trader. You make more money on longs than shorts. So I want the market to go up, so I make more money. So you do have to be a little bit careful of only collecting bullish data points and never collecting bearish data points. But I'll be even on this chart, there's strips of red, and there's strips of red where price has gone up despite that. But there's been strips of green where price has gone down. So I try to remain as objective as possible, but I'm also trying to collect as many data points as possible that just give me an objective picture. And to me, all the data points are screaming cycle top's not in yet. Bitcoin top somewhere between August and November. That's my objective take based on the data points I've collected, I highly recommend that, you take those data points into account, but also seek other ones, seek other people's opinions, look at why they have those opinions. If somebody's bearish, that's fine. But look at why they're bearish. Look at what is their invalidation. Why is that their invalidation? Don't just take my word for it, because I've been wrong in the past, and I will be wrong in the future. But I'm just here to share. I give this kind of like last 5-minute spiel at the end of every town hall, but I think it's super important because, like, I know people just want to I know it's in a lot of people's nature, and not necessarily everyone has the time to do research and get a lot of opinions, or aren't necessarily may not be the best at doing research, or don't understand markets at a deep level, and that's all fine. But the temptation is to just take somebody else's opinion, borrow their conviction, and copy trade off of that. Problem is, when things start deviating from that even a little bit, it's really easy to lose borrowed conviction. It's if I look at somebody else's thesis and they think the market's going to start moving up, and then it kind of deviates and moves down a little bit first, then I might get shaken out of their conviction, whereas they're a little bit more convicted. So develop your own conviction. And if you don't, if you're at a place where you're you can be convicted neutral, you can have conviction that it's going to chop and not trade. You don't have to be that's the other thing. And the final thing I'll say here is especially from an analyst perspective, if you're putting your opinions out there, you feel the constant pressure to pick bullish or bearish or up or down. But also as a trader too, the only two directions you can really trade in this space, unless you're just farming funding rate or yield farming, whatever, sidelined, you can only trade up or down. You can only trade long or short. So there's this natural binary temptation to just be long or short. You can be convicted of neutral and just not trade, or downsize your positioning until you get a better read on the market. So my advice would be develop your own conviction, whether that's long, short, or neutral. And neutral is fine. And there's been periods of time in the last couple of weeks where I've been neutral, but I've been slowly shifting to more and more bullish based on the stuff that I talked about today. Otherwise, gold and silver look great. If you don't have an allocation to gold and silver, I think you actually still have plenty of time to get one. You're probably going to get punished for buying all-time highs in the short term if you're just now buying, but metals are pretty bullish for the next year or two, in my opinion. All right. If no one has anything else, everyone have a great evening, great rest of your week and weekend. Ping me if you need me. I know that I haven't responded to every message yet. I apologize. Been super busy this week. I'll try to get to everything. Don't hesitate to ping me once or twice or 3 times if I haven't responded. I promise I'll eventually get to it. Otherwise, thanks everyone. Hope these are helpful. If not, let me know what I can do to be more helpful. All right, peace.